Is TransDigm a buy or a sell? Let's get started with the model. This is a large cap company, 71 billion market cap. They're trading at $12.62 a share and they have 56 million shares outstanding. This company manufactures aircraft components. It was founded in 1993, based in Cleveland, Ohio. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Free cash flow was flat from 21 to 22, then it grew nearly 50% into 2023, 1.2 billion. Another 50% growth into 2024, 1.9 billion. They completed their 2024 fiscal year. Their fiscal year ends 9/30. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that doubled from 600 million to 1.3 billion. Then up another 18% into 2024, 1.5 billion. Pretty good margins. They convert 19% of their revenue into net income. Revenue is the sales for the company, and that grows each year from 5 billion up to 8 billion. A nice steady growth year to year. They grew 21% in 2023, another 21% into 2024. We estimated 4 years of future free cash flows. We also estimated a terminal value, it's all cash flows, past year 4, that's 66 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $58 billion. We divide that by 56 million shares. And we get a calculated stock price of $10.37. They're trading at $12.62, so they're trading at a 22% premium. It's a sell according to the model. Do you think it's a buy or a sell? Let me know in the comments. There are 75 companies in the same industry as TransDigm, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend that much in CapEx, which is surprising, only 165 million. Because they're a manufacturing company, so you would expect a good amount spent in CapEx. We can't look at their debt to equity ratio. They have negative equity, which means their liabilities are higher than their assets. They don't pay a dividend. They generate 1.9 billion of free cash flow. They rank 6th in market cap, 71 billion. Pretty close to General Dynamics. They're 74 billion. We can't look at their price to book, negative equity. They're trading at 48 times earnings, a bit rich. They're trading at 38 times free cash flow, which is about the median. And they're trading at 9 times revenue, much worse than the median average. They only generate 8 billion of revenue. Northrop Grumman, which is the same size, generates 41 billion of revenue. General Dynamics, 46 billion. They are growing. Their 5-year annual revenue growth rate is 39%. Look at the average, 200%. That's because of these big outliers dragging up the average. They're trading in between a 52-week low and 52-week high, probably a little closer to the 52-week high. If you put $10,000 into this company 10 years ago, you'd have nearly $100,000 today. That's a 25% annual return, almost a 900% total return. So to summarize, I have them trading at a 22% premium. I give them a ranking of 6 out of 10. I probably wouldn't buy it short term, but definitely long term, it's a good investment. Ratios are a bit weak, 3 out of 10. Financials look real good, 7 out of 10. Revenue up 65% since 2021. Free cash flow up 133%. Let's take a look at their 10K. Here's 2022, 2023, and 2024. Sales go up each year from 5.9 billion to 6.6 to 7.9. Let's see if they give a breakdown of the revenue. Of the 7.9 billion of revenue, 3.9 billion power and control, and 3.8 billion total airframe. They do break that down between OEM, original equipment manufacturer, aftermarket, and defense. Only 190 million in non-aviation. 5 billion of their revenue is in the US, 2.9 billion outside the US. Their cost of revenue is 3.3 billion. These are all the expenses directly tied to generating the revenue. For example, the cost to manufacture the products. That's 41% of their revenue. So gross margin, 59%. Selling and admin expenses, a little under 1 billion. These are all the expenses not directly tied to generating the revenue. For example, marketing, that's 12% of their revenue. Operating income, 3.5 billion. Operating margin, 45%. 1.3 billion of interest on their debt, which is 16% of their revenue. 500 million of taxes. So their net income, 1.7 billion, last year 1.3 billion. Net profit margin, 22%. It looks like they paid a special dividend this year. which was $110 per share. It's a pretty big special dividend. I know their share price is really high. That's still a pretty big yield, about 5.5%. They don't pay a regular dividend. They pay a special dividend if they have extra funds. This is the biggest special dividend they ever paid. They show their EBITDA, $3.8 billion, a lot higher than last year of $3.1 billion. Let's look at their balance sheet. $10 billion of current assets, $6 billion of current liabilities, so a pretty good current ratio. They have a lot of cash, over $6 billion of cash. Inventory, $1.9 billion. Here's a breakdown of the inventory: $1.3 billion raw materials, $500 million work in progress, finished goods $290 million. Their total assets $26 billion. Their biggest asset is goodwill, $10.4 billion, and other intangibles $3.5 billion. Total liabilities $32 billion. They have $24 billion of long-term debt. Here's a breakdown of the long-term debt. They have 2027 senior notes paying a 5.5% interest rate. That's $2.6 billion outstanding. The most money they have to pay in a year is $2.7 billion in 2029. Pretty high interest rate, 6.375%, and it goes all the way out to 2033. Assets minus liabilities equals equity, negative equity. Like Boeing also, Boeing has negative equity. They raised $2.8 billion from selling their business, selling stock, and they lost $7.4 billion from running their business. I think the reason they have an accumulated deficit is because they buy back a lot of stock. They show $1.7 billion right here in treasury stock. Treasury stock is a contra equity count. It brings down your equity balance, because when a company buys back stock, its cash goes down and so does its equity. Let's look at a statement of cash flows. Operating cash flow is $2 billion, double 2022, $1.4 billion last year. In their investing section, they spent $2.3 billion of acquisitions. They talk about their acquisitions right here. In May 2024, they bought all the outstanding stock for SEI for $171 million. In June 2024, they bought all the stock of CPI's electron device business for $1.4 billion of cash, and they financed the acquisition with $2 billion of senior notes. And in July 2024, they acquired Raptor Scientific for $647 million in cash. So they're on a buying spree. In the financing section, they paid out $2 billion of dividends. Last year, they paid hardly any dividends. Before that, $1 billion. They added $7.4 billion of debt. They paid down $4.4 billion of debt, and they paid down another $550 million of debt. More debt, $6.8 billion of term loans, and they bought back $4.4 billion of term loans. Let's look at a company on Simply Wall Street. It's trading at $12.60, $71 billion market cap, flat in the past week, up 26% in the past year. It looks like they started trading in 2006 at $25 a share. And the reason the stock price is so high is because they don't split. It ran up to $640 in February 2020. And if you bought it at $640 in February 2020, 3 years later, you'd be pretty much flat. In February 2023, it was trading a little more than that. But the stock has more than doubled since the beginning of 2023. It got over $1,400 a share just a couple months ago. Now it's trading a little below $1,300. Simply Wall Street's valuation is $18.10. They say the stock is 30% undervalued. 21 analysts priced this stock at $1,500. They also say it's undervalued. Their free cash flow in 2021 was $800 million, and the forecast for next year is $2.3 billion. 2026, $2.6 billion. 2027, almost $3.1 billion. Their revenue back in 2013 was $2 billion. It tripled to $6 billion in 2020. Then it did come down. COVID was not good to this company. It came down to $4.5 billion. But now it's higher than ever, getting close to $8 billion. Here's their debt since 2013. It was $5.7 billion, and it pretty much only grows. Now it's $24 billion, a lot of debt. And they have negative equity, which means their assets are lower than their liabilities. Equity negative $6 billion. So that means their liabilities are $6 billion more than their assets. But they do have a decent amount of cash on their balance sheet, $6.3 billion. Plenty to service the debt. The way I look at it is 10% of their debt, 10% of $24 billion is $2.4 billion, and half of that is $1.2 billion. So as long as they have $1.2 billion of cash to service the debt, pay the interest, they're fine. Here are their special dividends. So back in 2016, they paid $24 per share. 2017, $22. They didn't pay anything in 2018. They only pay if they have enough funds. $30 in 2019. Again in 2019, $32.50. They must have did really well that year. Nothing in 2020 or 2021. In 2022, $18.50. In 2023, $35. And this year, their highest ever, $75 a share. Imagine you bought it for $75 a share a few years ago. Then they're paying you 100% yield. The CEO's salary was $800,000 in 2018. Now it's $1.4 million. Total compensation, $24 million. Tenure as CEO, 8 years. In the past year, there's been mostly insider selling. One buy for 1/2 of one share. It's kind of funny. Then an executive buys 0.48 shares. Institutions own 95% of the stock. The general public, 4%. The biggest shareholders are LA firm Capital Research, 21%, Vanguard, 11%, Principal Global, 3.5%, Alta Rock, 1.8%, Windacre, 1.3%, T. Rowe Price, 0.8%, Schwab, 0.6%, and to round out the list, Strategic Advisors, 1/2 of 1%. Their employee count was 7,300 in 2014. It peaked at 18,000 in 2019. Now it's 16,600. And the ticker trades on the New York Stock Exchange, Deutsche Börse, London Stock Exchange, Mexican Bolsa, and Sao Paulo Bolsa. So if you want to get a discounted cash flow model, watch this video in the top right corner and I'll explain how.